Traders around the globe, good morning, good afternoon, good evening, wherever you are. Stelios, are you around?
Morning, good afternoon, good evening, and good night.
How are we doing?
Very well. It's a glorious day here today. Really nice, sunny and warm day. So I'm feeling great. How are you?
Okay then, that was it for the weather forecast. We are not going to talk about the UK weather. I'm going to the school box. Yeah, it's extremely windy over here actually, and rainy. So yeah, we're still well in autumn here.
Nice weather for ducks.
Yeah.
Cool. Well, it's Friday.
It's still a bit early for the bunnies for Easter, so still have a few days time for it to improve. Right, let's get stuck into what happened yesterday overnight and what's to be expected. So the first thing is that the UK finally joins this Indo-Pacific CPTPP club. Get this abbreviation right. It does represent about 15% of global GDP. It's consisting of 11 countries, if I'm not mistaken. Mexico is a part of it, I think, and the whole Indo-Pacific rim. Well, Singapore is a part of it as well, to name a couple of the majors. So that's a little bit of I'd say good news for the UK trade, and in a move to resolve the issues or the problems that may derive from Brexit trade issues. UK is trying very hard to get trade rolling outside, and finally it's taken a few years, right, for it to come through. So that's relatively good news for the UK. We haven't seen it in the prices, but we come back to the price action a little bit later. In addition, the Lloyd's, where is it? I saw this somewhere. The Lloyd's barometer for the UK business actually rose a bit as well. It's still in the low numbers, but it went from 21 up to 31. It's a slight improvement there as well. It's a little bit of an improvement. So that for the small positive news on out of the UK. And then staying on the UK, let's mix up the data and the news a little bit. We saw this morning, well, this is the revision of the revision, but it was slightly better than expected, the Q4 final GDP reading. But then against that, we had the business investment coming in a little bit shy of expectations, actually a negative one on the quarter-on-quarter. But yet we escaped recession in the fourth quarter. The one though that came out as well this morning was the nationwide house pricing index, and that is coming off quite sharply. We've seen this in other countries as well, but there's seems to be a bit of a divergence going on time-wise between different areas in the world. So we have to keep an eye on that one. How this will evolve. In other news, sticking to the housing market, seen a report that the Australian housing market seems to be bottoming out. That is relatively decent news there as well, because they had some severe downturn there, and again. That shows a bit of divergence going on here and there, but that seems to be bottoming out now. And then also the rate bets have intensified for RBA to stay on hold, because overnight they had their strongest sale in 2-year bonds in I think it's like more than 2 years or so since 2021. The bid to cover rate was for the 2025 bond was 7.63, which is pretty hefty, and that shows that the market is quite confident in calling for them to keep rates still on the fourth. Is it next week, the 4th? That was the result of that bond issuance, showing the market thinking RBA will be on hold this time. What else do we have? Yeah, yesterday the Fed balance sheet came out. They are now reporting it quite actively. It showed a little bit of a decline. The repos stood at 55 billion. I think that is down from about 60. But the FDCIs, the loans to FDCI, which is which has to do with this banking stress and everything, that still remains sticky high at 180 billion. It was 179 billion on the prior reading. And this BTFP program that the Fed put in place also rose to 64.4 billion from 53.7 billion previously. So the whole stress is not yet out of the system. It's probably going to take a few more weeks, if not months, providing that there's no more dead bodies falling out of wardrobes or closets. So yeah, we'll keep an eye on those numbers as well. What else do we see? Yeah, Finland has finally got the all clear to join NATO. Sweden is not done yet. As we know, Turkey and Hungary, I think, are trying to block it, or are still vetoing it. So Sweden will have to wait a little bit longer, but Finland seems to be a done deal now to join the NATO. Shouldn't have a direct impact on anything, but just for the future, it's going on geopolitical front. It's going to be quite important. Yeah, another one is that on the M&A front, the start of 2023, seen an article there that the start of 23 is the slowest one in 22 years, and all of that has to do, of course, with the banking stress on both sides of the Atlantic. So the M&A buyers or capitalists are not really very hot right now. So M&A, as we know, makes money flow around. So that means that the money, the cash in circulation in the global markets is a little is less than what it should be in normal markets. What else? Yeah, Fitz Collins and Kashkari, they see more work on inflation. Susan Collins said that she sees 25 BPs increases as appropriate right now. So she's looking at more than one. Has to be noted that she's not a voter on the FOMC committee right now. In China, well, we know the ping pong that's going on between China and the rest of the world. But after von der Leyen's comments yesterday, the China Commerce Chief finds it useful to visit the EU in April regarding trade between the EU and China to try and solve, or at least talk about the tensions that there are now. Again, it hasn't had an impact straight away, but we know about the nervous geopolitics right now. So we are going to have to keep an eye on what's happening between the EU and China, because as we know, EU has not really categorically ruled out or how shall I say, block apart from the global ones or whatever, they don't really block categorically China trade as hard as the US is doing. So that's going to be interesting to know what's going to come out of that one. And have you seen anything else in the global news, Stelios?
I think you covered it. A couple of comments I want to make. Firstly,
Yeah.
on the UK and the trade agreement that they made. Remember when Brexit was actually no, we weren't. Forex Flow and ForexAnalytix were not partners at the time, but we were saying when after Brexit and during that whole time that eventually, I mean, and by eventually I mean 5-10 years in the future, because it's in the interest of all countries to have smooth trade and to facilitate trade. I always was saying that I think the UK eventually, in multi-year horizon, will put in place trade agreements that are going to bring trade back to, I'm not saying the same levels as it was when in the Eurozone. The Eurozone has a very particular set of trade rules, and everything is really easy, but obviously that comes with drawbacks. But I was saying, I think quite a few of us were saying that eventually the UK is going to put in place agreements that are going to facilitate trade, and they go, at the end of the day, the UK is going to be on a long time horizon better than it was before, because then they're going to have rules in place which suit them for trade without many of the drawbacks. So the centralized control of a lot of things and a lot of decisions that the British want to be making themselves. So in the short term, Brexit was always going to be a problem, but in the long term, as long as it's handled properly, it can, dare I say it, be a good thing. So this is one step that we're seeing today announced, and I will bet you that there will be some kind of trade agreements with European countries down the road, maybe a few years down the road, which are going to, excuse me, ease the way things are done.
Yeah.
So that's, yeah.
Have you seen our new King Charles was in Germany yesterday?
Oh, he was in Germany. Oh, there you go.
Yeah, buying German cheese, sausages, and everything. I don't know if he talked about anything else, but no, I'm joking. He was in the Reichstag as well, and he even spoke German. So I was quite surprised seeing it on the news last night. No, but you're absolutely right. I 100% agree with you. There will be less restrictions to what they can or can't do, and somewhere. Perhaps Bojo wasn't completely wrong when he said, like, if we don't have to pay for EU for the EU Commission, we can use that money for something else, and that is probably going to, in the long run, as you say, come out beneficial. But we'll see about it.
One more thing I wanted to just comment on the Finland NATO story. I think it's a big story, this, maybe not with an immediate effect on markets or anything, but this is a very, very big step, because Finland, remember, is a neighboring country of Russia. Sweden isn't, we used to have Hungary, you correctly said Hungary, Turkey vetoing, but they've turned, and chances are they're going to turn for Sweden as well. I mean, I don't see why not after Finland's done. So I think this is big news, because Putin has repeatedly said that this is going to be a problem. This is a neighboring country. Obviously, there are more neighboring countries with Russia that are members of NATO, but for some reason, Finland has been. He's been very vocal about Finland. I'm just saying that this is big news. Now, how does that affect the Russian/Western relations in the future? It's a big question mark. It depends a lot on Putin himself, but I think it's excuse me, not something just to be brushed aside. I think it's a big news, I think, today.
Yeah, I agree with you. Especially looking at the situation of the geopolitics now. Well, actually, that's a situation that sparked all of it. But yeah, it's a big step. I agree. I was just looking through. I think we have done about the global headlines, so we can jump over to the data now. So we saw yesterday the German CPI coming in sticky. And then let's straight move over to what happened. Well, and as we saw earlier, the Spanish CPI was lower. But then let's jump straight to today. So we saw the French CPI also remaining sticky, although the year-on-year numbers are coming off, right? And so we've seen that as a bit of a global one coming out, and so the European numbers did exactly the same. They came in quite a bit lower on the headline, and the core remaining sticky. That is really it's a global picture, right? I mean, it's a global picture. The core is remaining sticky, and the headline CPI is coming off virtually everywhere. So I'll call that 1-1 and ball back in on the center point, and we still don't know what to do with the CPI right now. I don't think it's going to impact ECB decisions right now, because we are still way above where those numbers should be. So I reckon somewhere down the line, ECB is not going to really take it into account. What they could start to take into account, though, is another is our consumer data. Because if consumer spending starts to go down, then there might be a double whammy problem with high inflation, consumer spending less. That should in turn be a drag as well on inflation. But I think the consumer going overboard, that is something that the central banks are not going to like to see. What do you think, Still?
Well, yeah, I mean, spending is the next step. And I mean, a decrease in spending is the next step after rates are rised. How do you say it?
Rose?
Rose. Anyway, after rates rise.
It's Friday. It's Friday.
Yeah,
it's okay.
yeah. I'm drinking way too early today. No, after rates rise and inflation eats away at the average person's disposable income. We've talked about it many times in the past. With less disposable income, you get less spending, and we're seeing retail sales numbers dropping, going negative, even though they're not inflation adjusted, right? So it's theoretically, with inflation going higher, retail sales numbers should be going higher as well. So if they're not, that means the spending is really underperforming a lot. So this is, the market seems to be convinced now that those have risen. Thank you, Tulan. Yeah. The market's convinced now that there's going to be recession pretty much everywhere. And I don't disagree. The question is, how severe is it going to be? In the US, in the Eurozone, we're already seeing many indicators turning south. And with the exception of employment, really, everything else seems to be not doing very well. So, yeah, spending is something we really, really need to be focusing on for sure.
Okay, thank you. So yeah, moving on, we've had the final of the final revision of the Q4 GDP in the US, a tick away from the flash. Jobless claims, nothing to mention there. PCE is also Q4. Yeah, well, 0.1 above. It's not. We're not going to write home about all that. A couple of things to mention on the central bank side. So yesterday we had the South Africa, where are they? Here, interest rate decision. As people know, we were closely watching this 18 level in the dollar rand, because it's and I will show it on the charts in a bit. And yesterday it finally broke, because the South Africa Reserve Bank hiked by 0.5% instead of the 25 BPs expected. And they came out with some quite hawkish comments as well. So the market was perhaps already poised to break that 18 level on the dollar rand, but doing 0.5% instead of 0.25% shocked the market a little bit, and dollar rand lost 1% straight away. On the Banxico, they did 25 as expected. They said that they could raise or hike rates further, but we know already from prior meetings that they are very much, first of all, looking at what FOMC is doing, and they probably copy sort of the interest rate decision, unless inflation starts to really come off, and then I think Mexico could be a central bank that cuts faster than the Fed. But it was a bit of a mixed bag, and as a result, $MEX didn't move that much either. $MEX actually did rise a little bit, but I think it may have to do more with a weaker fiscal balance that came out later on. But in the meantime, that has already been undone. That move. Just hang on, just one little thing I need to do a little bit of hedging here. One sec. Okay. Moving on to today. So we had the Tokyo fixings, the Tokyo CPI coming in, also saw the core a tick lower. The little one that was unusual, or yeah, a little bit unusual, because if you're in a tight market, it was a little unusual that the employment rate went up. It did not really affect too much because everything was about the last fixing of the fiscal year in Tokyo today, and I'll touch upon that a little later. It is though to note that for once the industrial production numbers came out better than expected. That's not your everyday news in Japan. So could there be a decent window there in the industrial side of the economy? Let's wait and see what happens with the next set of data. Retail sales also came out a lot better, and that's good news as well over there. They probably already spending a little bit of what they are going to get out of the Shundo wage negotiations. Because end of fiscal year, it's also a bonus day in Japan, just for your guide in case you wouldn't know. Moving on to China, better than expected, actually much better than expected PMI data. Dollar China did drop a little bit on it. We also saw the antipodians, especially the Aussie, rise just a tad on it as well. But in the meantime, that move has already been undone. I think a lot still, as I said, has to do with end of month, end of quarter. There we will see clearer in once come April. UK data done. German export-import prices, retail sales, not great, right? Look at those year-on-year retail sales. They're really coming in weak. And as Stelios already mentioned a good number of times. But I think in Germany, isn't Germany the one country where they are inflation adjusted? I think so.
Is it? Oh, maybe I made a mistake then.
They are.
Okay.
Now I recall, they are in Germany. Germany is one of the few countries that produces retail sales on an inflation-adjusted basis.
My bad, sorry, everybody.
So if we do inflation-adjusted, and you have an inflation in Germany which is at 7 or whatever, call it, where is it here? 7%. So the retail sales were pretty flat, in essence, this morning, because they came out at minus 7.1 year-on-year. But still, the month-on-month, when you expect a positive number and it comes out negative, wherever inflation is, it's not a great number for the German retail sales. Yeah, Italian CPI in line with Spain yesterday, coming off relatively sharply. It seems we have a little discrepancy. How do I have to express that? A little difference between what's happening in Southern Europe and the more central and northern part of Europe, what inflation is concerned. But then again, we also know that the southern part shot up a lot steeper as well than what the northern part did. So we can view this as a little bit of a rebalancing south versus north, I think. And that's it for what the data that we had are concerned. This afternoon, we are going to have the February PCE data. We all know that the Fed is watching those really closely. Personal income and spending, ditto. Those numbers are going to be pretty important. Now, are they going to have an effect today? That's the big question, because we are end of month, end of quarter, as we know. Flows will have to be done, whatever those data come out. So those ones, if the market move goes against what those numbers could show us this afternoon, these ones are going to be taken into account for when we'll be past the weekend or past the fixing later on today. If in turn flows of the day go into the same direction as this number may take us, then we could see some funky moves this afternoon, I think, into the last hour of the ahead of the 4 p.m. London fixing. So they could be a bit of a break, or in turn pretty fierce accelerator of whatever there is to do this afternoon. Michigan is the final ones, the final reading. It's always interesting to keep an eye on what they are doing, of course, but unless they come out far away from what the flash readings were, these will probably be largely ignored by the market. So that for the data. So then let's talk a little bit about what's happened in this market. And first of all, let's talk about what happened in the yen. So I'm going to change the screen. Can you see my dollar yen?
Yep, the yen is probably the only thing moving today.
Yeah, mostly for now. Yeah, absolutely. The rest has been rather a spectator than an active participant of what's been going on. So let me just even go for once. I usually don't go to those time frames, but we have to do it for once. So this is what happened overnight. So we started, that's the end of our day. It's GMT, right? If you look at the clock here below, that's GMT. So 0 hour 55 is GMT was the Tokyo fixing, and look what we did. We printed the high pretty much to the second on that on the Tokyo fixing, and then we started to take a move lower again. We did have another run up early doors this morning at the close of Tokyo. Also with euro yen jumping around after those on the data out of Europe as well. But I think this one was probably to take some stops out somewhere. But yeah, I mean, we pretty much printed the extreme on the Tokyo fixing, and I've been speaking about that in our chat rooms quite regularly. Is that it's not unseen. It's actually relatively regular that the last day of the fiscal year in Japan, the Tokyo fixing prints an extreme in some instruments, and we have seen the same. And that was a pretty solid move as well. We have seen the same happening in the euro yen, printing the high, bang on 955 really. We were watching it. We were in the trading room. We've traded it actively as well, and so. Yeah, pretty much as I was expecting that there was going to be an extreme on this Tokyo fixing, and that's exactly what happened. So now, for the time being, we are digesting this, and we will see what happens later on today. Now, what is going to happen later today? So first of all, we have those fixings, right, coming up, and as I said, we are going to possibly see some decent moves. We have seen those euro moves over the past 4 or 5 days. So today is actually the first day where the euro crosses are relatively quiet, and I must say they're actually coming off well, coming off is a big word, but a lot less bid than they were the past 4 days. So I'm pleased to think that for what the European sessions is concerned, we can have another one in 1 hour time, even in 2 hours time. There may be some more fixing to do in the euro crosses, but then we are going to really move on to what's happening with the dollar. Yesterday we went into this resistance area. I think when the dust settles, this is an interesting area for me on the euro dollar. Without speaking yet about the prior high above 110, and that will, I think, depend on where on what the PCE or so may do this afternoon and where the flows are. But I think it's an interesting zone here, 109.2060 on the euro dollar. I'm going to keep a close eye on where this closes. If we start to test this after the 4 p.m. fixings today, I think there's a chance next week we could see this fly. On the other side, I'd say if it caps, then for the end of the day, we're probably going to hang around somewhere in those low 108s or mid 107s. Anyway, I've been saying in the trades room, I've got a couple of positions running. I'm just managing those, and I'm really going to only trade short-term jabs into the fixing perhaps, and then after the fixing we'll see what there is to do. I'm not planning on doing much between now and then. So that for the euro dollar. On the dollar yen, no, cable first of all. Yeah, cable went to close to retest this top end of the wedge here, the rising wedge. We know that the 124s are going to be important, right? This 124, call it figure to 124.5 is really a big zone for the cable. We have stopped there many times, and if ever this thing is would be breaking, then I think cable could be talking about 126, and why not even 127? We'll see that in the new month. But and I'm mostly talking about the top side, because if we fail here, I'm not sure how much strength there is in the dollar when we move over to April. Unless those PCE beat and the consumer spending and stuff really beat a lot. I'm not sure how much strength there is in the dollar to really go and test much lower. So I'd rather say if we close the month here, it's rather going to be rangy, or if anything stupid happens to the dollar, I start of April could be a little bit could see a little weaker dollar perhaps, and I'm taking I'm sticking my neck out here, but it looks to me that yeah, it's possible, unless this is all end of quarter, of course. Don't underestimate, as I said, those end of quarter flows. So the first supporting cable 123.40, and then we know where the resistances are. I shouldn't even be looking at it because it's still trapped in this 80 and a quarter zone, this euro sterling. But I say perhaps this afternoon this could move a little bit, because I'm seeing a lot of divergence between what happened in the sterling, in the FTSE and the European equity markets. And I think we actually could be seeing a little bit of a move in this one this afternoon, so keep it in mind. Otherwise, we know where it is, right? 87, 89 is the big range. And we have to talk about metals, right? Because they have been, I'm not going to say on a charge, but at least gold and silver have been pushing higher towards month end as well. I'm not sure. And I'm not sure, Stel, if you would know, are there any fixings in metals as well for the end of the quarter or the month, or any of our viewers, any idea about it?
Pardon?
On metals.
Oh, that would be helpful.
Hmm?
Sorry, I was breaking up there. I don't know. I don't know
Yeah,
if
okay.
our viewers have any idea, but I
Well,
think
we've
metals
seen,
are now getting to a point where, then that's the reason why I unloaded half my silver long had
yeah,
done very well. There's a risk now. I want to see month end go. I want to see what the next
yeah,
move is, and I want to see silver break 24, that wedge, which is 24 and change, really 24 and a half. Above a daily close above 24 and a half, I'm adding. And if that means that I close my longs too early and I have to re-enter higher, it doesn't matter to me.
yeah.
So
I'm with you there. Yeah, I'm with you there. I've also offloaded a few just around 23.78 yesterday. Yeah, so we have this channel first of all, and we are really testing it at the end of the month. But it could be end of month, right? And then we have the other one here, the blue one, which comes in around those prior highs. But I'm with you. I'm going to maybe not even wait. If I see on Monday that it's starting to take the direction, I may actually buy some again and see if it can break and then add again on a break. If not, we are going to be, I think, waiting for again high 22s to low 22s. I think 22, 23 now, unless something is changing, should be already an intermediate support zone, in my opinion, at least. So that's for the metals. Yeah, then let's have a look at what happened there on the SARB. We were watching this whatever triangle channel wedge whatever, and it's been trading up and down, up and down, up and down. And then yesterday I was, or actually already a couple of days I was saying that, well, there's a few too many retests, and we are going into end of month, end of quarter. I wouldn't be surprised if there's a little bit of a stop run below. And then SARB decided to hike 50 basis points, and the thing just dropped. We were trading around 1802 or 3 when it came out, and the first move was down to here in the 1780s, and then it did a bit of a yo-yo, well, 0.5% or so yo-yo, but for the time being, we can't really regain 18. This is going to be one to monitor, I think, come the new month again. I'm still not a fan of the South African rand, but as long as this doesn't break back above 18, it's a bit dangerous for me, at least, to catch a knife. I am going to have a close look at what happens between 1760 and 1770, if ever we get there. But I won't make the decision today. Today is not decision time, I think, to take medium-term positions unless the market really takes some stuff out of sync with what's really going on. But then it's going to have to be a really big move. It's really a silly move down to below 17.5. Then I may try something. But I'm not planning on making a decision here before the end of the day. Yeah, the rest is going to be about what's happening on the end of month, really. We've seen dollar Canada breaking whatever this channel wedge triangle. There was a lot of stuff there, but fact is, since it broke 136.40, it actually never looked back. I think this one is just useless. It actually never looked back, and we came to rest on the next support, which is 135.10, and we have a bit of support here around 134.90 as well. Could be enough if we see the width of this pattern, 138.60, 138, and then 136.5, two big figures. Yeah, that's rather pointing at 134.40, which is around here, but hey, we're still end of month, end of quarter. Anything can happen in there as well. Models that we saw earlier this week were either very neutral for today's dollar event, or mildly dollar bearish, like the needing to sell some dollars. If I look at the last couple of days equity moves, we may see some dollar selling in general in the system as well. I'm but I'm not going. I am a little bit short euro dollar right now, but that was just to trade that top end of the range, and I think a lot was had to do with end of month, end of quarter as well. But I won't be shy in stopping myself out if it goes through that 109.60. Been trading it around already a little bit. But yeah, so overall the market is expecting for little dollar sales, but I'm not going to really jump on that myself. Still, did you want to watch at anything else?
Well, nothing has moved today. I mean, apart from the yen and maybe the Swiss a little bit, nothing's moved. So I have nothing new to say compared to what I said yesterday. It's all about quarter end, and I wrote on the chat room, I think today, you know, if you've been long risk over the past few days, as we said that we would be grinding higher, I think now is probably a good time to start taking profits and getting out. I have a fear that as we get to the close of the day, we're going to start seeing red in equities. But you know, it's been a pretty decent run. But I think we're pretty much done now. But I don't have anything else to say. It's all the same as yesterday.
Yeah, I'm not going to disagree with that. And just another yen pair to watch. This one as well, the Canada yen printed the high right on the fixing, and we're seeing that. Thanks, Greg, in our room. He pointed me to that as well. Is that we have the top end of the daily Ichimoku cloud in Canada yen is also around that, roughly around the trend line, and we printed the high. Has to be said though that this one is gradually making its way back up to that level. So I'm very careful on that one. But a lot of yen process have put in their highs. So I have small positions in those yen pairs, but I'm not going to add. I'm just going to manage what I have today, and then we'll see on Monday, yeah, what we will have in the bag, and if we can find some decent patterns in anything. And I think with that, we are going to call it a week, shall we? A month, shall we? A quarter?
Yes, please. I'm so tired.
Yeah. Yeah. All righty. Well, thanks everybody for your presence. Thanks, Stelios, for your comments as usual. And we talk to each other next month, next quarter, next fiscal year. A lot of Japan listening to us. Thanks, everybody.
Thank you, Kay, for your excellent analysis always. Thank you. Thanks, everybody.
Bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.